Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Microchip Technology Incorporated quarterly report. Microchip Technology Incorporated offers a wide range of businesses and services that cater to various industries. At the core of its operations are semiconductor products, which include microcontrollers, microprocessors, and analog products such as power management and radio frequency (RF) components. The company's product offerings can be broadly categorized into several areas: automotive, industrial, computing, communications, lighting, power supplies, motor control, human-machine interface, security, wired connectivity, and wireless connectivity. Its specialized mixed-signal microcontrollers are designed for specific applications such as automotive, industrial, and medical devices. In addition to its product offerings, Microchip Technology Incorporated also provides various services including field programmable gate array (FPGA) products, application development tools, memory products, and engineering services. The company licenses its superflash, embedded flash, and non-volatile memory technologies to foundries, integrated device manufacturers, and design partners for use in the manufacture of microcontroller products. Furthermore, Microchip Technology Incorporated offers wafer foundry and assembly, and test subcontracting manufacturing services, timing systems, application-specific integrated circuits, and products for aerospace applications. The company's diverse range of businesses and services enables it to cater to various industries and provide innovative solutions to its customers. Unfortunately, I don't have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to increase significantly in the past year. The stock price of Microchip Technology Inc. has increased significantly in the past year due to several factors. One major reason is the company's strong financial performance. Microchip Technology Inc. has consistently reported high revenue growth, driven by its innovative products and expanding customer base. This financial stability and growth have boosted investor confidence, leading to an increase in stock price. Another factor contributing to the rise in stock price is the growing demand for microcontrollers and other semiconductor products. The increasing adoption of Internet of Things, IoT, technology, artificial intelligence, and autonomous vehicles has created a surge in demand for Microchip's products. As a result, the company's revenue has increased, leading to higher earnings per share and a subsequent rise in stock price. Additionally, Microchip Technology Inc. has been expanding its product portfolio through strategic acquisitions and partnerships. This expansion has enabled the company to tap into new markets and increase its market share, further contributing to its financial growth and rising stock price. Lastly, the overall semiconductor industry has experienced a significant upswing in recent years, driven by advancements in technology and increasing demand for electronic devices. As a leading player in this industry, Microchip Technology Inc. has benefited from this trend, with its stock price reflecting the company's strong position within the market. Microchip Technology Incorporated maintains a market capitalization of $40 billion, broadly in line with the industry peer group. Microchip Technology Incorporated trades at a higher price-to-book ratio of 5.68 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 54% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 2.44%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and far-reaching. Global economic conditions play a significant role, with tariffs, trade restrictions, interest rates, inflation, and public health concerns all having a direct impact on businesses. Additionally, cybersecurity threats such as cyber attacks, data breaches, and AI-enhanced attack methods can also lead to revenue decline. Regulatory compliance is another critical factor, with export controls, trade sanctions, tax laws, regulations, and environmental requirements all posing potential risks to companies. Industry trends, including technological changes, industry consolidation, government assistance to competitors, and market acceptance of customers' end products, can also influence revenue growth or decline. Supply chain disruptions caused by labor shortages, supply chain interruptions, and manufacturing operations disruptions due to public health concerns or natural disasters can further exacerbate the situation. Government policies such as changes in government spending levels, priorities, and regulations can also have a significant impact on businesses. Competition from technical innovations, new products by competitors, and market share fluctuations are other key drivers of revenue growth or decline. Finally, financial performance, including fluctuations in operating results, financial condition, and analysts' estimates of financial performance, can also affect a company's ability to grow its revenue. The net income of the company experienced a significant fluctuation between 2024 and 2025. In 2025, there was a notable increase of 127.3% compared to the previous year, with the net income rising from -$53.6 million to $62.7 million. However, when comparing the first 9 months of 2025 to the full fiscal year, there was a decrease of 44.3%, indicating a decline in net income. The profit margins also underwent changes during this period. The gross profit margin saw an increase of 4.9% in 2025, rising from 54.9% to 59.8%. Similarly, the operating income margin experienced a significant boost, increasing by 11.3% in 2025, from 11.6% to 22.9%. The reasons behind these changes are multifaceted and complex. The decrease in net income can be attributed to various factors such as fluctuations in global economic conditions, trade restrictions, disruptions in supply chains, and changes in market demand or acceptance of products. Additionally, the increase in costs of raw materials, supplies, equipment, utilities, labor, and subcontracted services contributed to a decline in profit margins. The company's ability to adapt to these challenges will be crucial in maintaining its financial stability and growth prospects. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the net cash provided by operating activities increased from $692.2 million in 2024 to $705.1 million in 2025. This increase suggests that the company is generating more cash from its core operations year over year. The operating cash flow for both years is also reported as positive, with a total of $705.1 million in 2025 and $692.2 million in 2024. Furthermore, the company's total operating income has been steadily increasing, reaching $104.1 million in 2025 compared to $62.5 million in the previous year. Overall, these figures indicate that the company is generating a significant amount of cash from its core operations, which is a positive sign for its financial health and sustainability. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, there was a decrease in long-term debt by $264.4 million from March 31, 2025, page 3. However, subsequent pages reveal an increase in gross long-term debt to $5,663 million, page 21, and a total senior indebtedness of $157.4 million, which is likely a typo or error, page 23. The carrying amount of debt obligations increased by $264.4 million from December 31, 2024 to March 31, 2025, page 24. Furthermore, the total debt level as of December 31, 2025 was $5.39 billion, a significant increase from $4.85 billion in March 2025, page 44. Additionally, page 73 confirms that the debt level has increased significantly from previous periods. In contrast to the increasing debt levels, interest expenses have decreased in some periods. Net interest expenses have decreased in both periods compared to the previous year, page 4, and amortization of debt discount and issuance costs have also decreased, page 6. Moreover, interest expense has decreased significantly, with a decrease from $68.7 million to $55.9 million for 3 months, and from $189.6 million to $169.6 million for 9 months, page 41. Overall, the company's debt level has increased significantly in some periods, while interest expenses have decreased in others. The performance of various segments and product lines within a company has been analyzed based on recent data. In terms of overall segment performance, semiconductors stood out as a strong performer, with a 13.4% increase in net sales over the 3 months ended December 31, 2025, and a stable gross profit margin at 57.4%. This trend continued into the 9-month period, albeit with a slight decrease in gross profit margin to 54.8%. In contrast, technology licensing failed to show any significant improvement or decline in net sales or gross profit margins over both periods. Looking at specific product lines, mixed signal and microcontrollers demonstrated notable growth. Mixed signal products saw an increase of 10% in the 3 months ended December 31, 2025, but a decrease of 3.6% in the 9-month period. Microcontrollers, on the other hand, experienced significant growth, with increases of 18.4% and 7.6% over the same periods. The other category did not show any notable changes in net sales for both periods. Management is projecting a mixed outlook for the company in both the short term and long term. In the short term, they expect fluctuations in operating results due to competitive pricing pressure and modest price declines. However, they intend to moderate future average selling price declines. In the long term, management plans to continue transitioning outsourced assembly and test capacity to internal facilities, investing in equipment and facilities to support manufacturing capacity growth, and reducing production levels at global fabrication facilities or closing them completely. The company's growth strategy involves expanding into new markets such as AI/ML, data centers, edge computing, and IoT, investing in new and enhanced products and design and manufacturing process technologies, and focusing on proprietary products with stable average selling prices. Financially, management expects to maintain quarterly cash dividends depending on market conditions, evaluate future share repurchases based on cash generation, leverage metrics, and market conditions, and finance capital expenditures through existing cash balances and cash flows from operations. The company also faces various risks including trade policy changes, tariffs, taxes and restrictions on supplies, stringent environmental regulations, and regulatory frameworks relating to cybersecurity, AI development, and the use of AI in products and services. The company has a history of rewarding its shareholders through various means. One such way is by paying dividends, which it has done consistently. In fact, the company has paid out significant amounts to common stockholders over the years. For instance, in the 9 months ended December 31, 2024, it distributed $730.9 million in cash dividends. In addition to paying dividends, the company has also been actively involved in share buybacks. This is evident from its approved share buyback program initiated in November 2021. As a result of this program, the company repurchased approximately 1 million shares in fiscal 2025 for $90 million. These efforts demonstrate the company's commitment to returning value to its shareholders through various means. Concerns about inventory buildup or supply chain disruption are evident throughout various pages. Inventory levels have been high, with some distributors holding stock for as long as 251 days. However, efforts to balance production, customer demand, and inventory levels have led to a decrease in inventories. Supply chain disruptions pose an even greater risk. Potential losses or disruptions of distributor relationships, public health concerns, cybersecurity incidents, terrorist activity, armed conflict, tariffs, trade restrictions, and changes in the tariff landscape all contribute to this concern. Additionally, challenges in securing alternative supplies for specific products can lead to significant delays in product shipments. The imposition of tariffs on semiconductors is expected to further disrupt supply chains. Ongoing trade negotiations may subject semiconductors to additional tariffs, while restrictions on sales of certain Chinese-made products and suspended anti-dumping investigations also pose risks. Furthermore, indirect sales in Russia and Belarus, despite preventative measures taken, highlight the potential for supply chain disruptions. Overall, these concerns underscore the need for companies to be vigilant in managing their inventory levels and supply chains to mitigate the risks associated with these disruptions. That concludes the financial summary for Microchip Technology Incorporated. Feel free to comment below, and I will be happy to answer them when possible.